Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly updates on As Good as Gold. Over the past week, gold prices took a nosedive, then managed a slight bounce back. The FOMC meeting minutes threw everyone for a loop with a surprise hawkish tone, which hammered gold prices. While strong US economic data didn't help either, keeping the pressure on. And on the flip side, worsening geopolitical conflicts and ongoing central bank gold purchases have been providing a safe net for gold prices. All eyes are now on the US PCE inflation data coming out Friday to get a better sense of where things might head next. So if we take a look at the gold against US dollar daily chart, after hitting a record high of $24.50 on May 20, gold dropped by 4.1% within just 3 days, wiping out gains from the previous half month. Last Wednesday, gold fell below $2,400 mark, broke past the late April high of $23.52 the next day, and closed at $23.28. This level coincides with the 23.6% Fibonacci retracement of the rise from mid-February to May 20 and the early May resistance level, proving to be a strong support area. Buyers stepped in last Friday, nudging gold back up to around $23.55 to $23.60 by this morning. Still, this recovery barely dents the earlier losses. To regain the upper hand, bulls need to push prices back above $2,400, and if the upward momentum doesn't pick up, the $23.52 and $23.28 levels could act as support to cushion further drops. So delving into why gold plunged so dramatically, the hawkish shift in May FOMC minutes is a major culprit. While despite some internal Fed disagreements, the overall message was still rate hikes are highly unlikely, but rate cuts need more confidence. However, the minutes hinted that if inflation doesn't drop, some members might just consider tightening policy again. Although the minutes were penned before the April US CPI report and didn't factor in the recent cooling inflation, they still caused a significant market stir. The US dollar index briefly shot about 105, and the 2-year US Treasury yield jumped by 7 basis points on the same day, now eyeing 5%. This increased the opportunity cost of holding gold, hitting its price really hard. And actually, I don't personally see the Fed raising rates again, but recent US data give them plenty of reasons to hold off on cutting rates. The May US CB Consumer Confidence Index hit 102, much higher than expected, indicating optimism about the US economy. Plus, initial jobless claims have been steady at around 220,000 for the past month, showing a stable job market. The higher for longer stance put pressure on gold prices, and also profit taking after gold's recent high has limited its upward potential as well. But in the short term, there are still factors supporting gold prices. Demand from bargain hunters, central bank diversification of reserves, increased safe haven demand due to airstrikes in Gaza, and the European Central Bank's likely rate cuts in June are all positives for a gold bias. So overall, after a heavy sell-off, gold prices have seen a slight rebound, but the buying momentum is still weak. The fast stance on rates remains the biggest hurdle for gold's rise, while geopolitical tensions and central bank purchases provide a safety net. The first half of this week is pretty, I would say, quiet news-wise, but the latter half will be all about economic data. The US core PCE data for April due out on Friday is crucial. The market expects a month-on-month increase of 0.2% for core PCE, down a bit from the previous 0.3%, and a year-on-year increase of 2.8%, the same as before. If the month-on-month growth cools as expected, it would revive optimism about anti-inflation progress and give gold prices a boost. So that's pretty much for this week. If you have any thoughts on US PCE data or recent gold trading, feel free to leave a comment below and let's discuss. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!